Sales in Germany might be slowing, but Opel's assembly line is running full steam ahead. With the euro near a 4-year low, CEO Nick Riley is looking to grow the business in China.
Well, clearly a lower euro is going to help if that in our exports if that continues. We have had 2 or 3 good years in China. The China market's very strong.
Europe is China's biggest export market, about 20% of its total, or $240 billion of goods. Chinese imports from the EU are worth just about half of that. Since the start of the year, though, the euro has declined almost 15% against the yuan. Economists say the euro's fall takes pressure off China to loosen its currency peg.
I'm sure they're less likely to let the yuan appreciate at all, and if they do, by less against the dollar. The reason being that they're now less competitive against the Europeans, and therefore they've achieved quite a lot of revaluation already without any shift in the dollar rate.
U.S. Treasury Secretary Tim Geithner is in China this week. He's hoping to persuade officials to let the yuan float. Though the weaker euro will make that more difficult, rising inflation in China should help.
It certainly does reduce the probability of China moving its exchange rate. But when you take as well the inflation outlook into account, then you come to the conclusion that China has to do something on its monetary policy. It has to hike interest rates, and it might have as well show some willingness to move its exchange rate in the third quarter.
While German-engineered vehicles are sure to be undercut by cheaper Asian-made cars, here at Opel they are confident there's space in the Chinese market for high-quality imports to fit. And with the favorable euro-yuan rate, now might be the best time for Opel to make its move. Olivia Stearns, Bloomberg News.